Stock market investors, welcome back to the channel. My name is Jason. In today's episode, I want to break down how we as investors can potentially profit off of moves in the government. Recently, Donald Trump fired the head of the Department of Homeland Security, Kristi Noem, and replaced her with Mark Wayne Mullen, the senator from Oklahoma. So we want to find out how we could potentially profit from this by diving a little deeper into Mark Wayne Mullen, who he is, what his investments are. So I'm going to go down through the list of the investments that he recently just purchased, some of the holdings he already has, break down each one of these companies and let you know my favorites and potential stocks that he owns that could shoot up with his recent appointment as the head of the Department of Homeland Security. If you like these type of videos, make sure you hit the like button, subscribe to the channel. Let's get into the video. All right, stock market investors, let's get into this video. But first, this is not a political video. This is strictly a strategic video positioning ourselves to make money off of these moves. If you're not at the table, you're on the menu, guys. So let's get at the table with these guys, see what they're doing, and try to position ourselves to make some cash. I love this Instagram page. I'm not affiliated with them at all whatsoever, but Politician Trade Tracker, check them out. They put a ton of good material out there and news that we want to be in front of as investors, right? So Trump fires Kristi Noem, appoints Mark Wayne Mullen as new Homeland Security head. Here are 4 of the stocks that he owns that are very interesting. He's doing pretty well. I'm outperforming him, but still doing pretty well, up 35.8%, right? There could be some potential conflicts of interest, but when there's conflicts of interest, these politicians, they don't work. They work for us, but they don't work for us. They work for themselves, and that's how they enrich themselves. So let's just pivot and see what they're doing right now. All right, the first company is VSEC. VSEC is the ticker symbol. He owns $150,000 worth of this company. VSE right now is bidding on a contract for storage, maintenance, and disposal services for personal property seized by various federal agencies, including the Department of Homeland Security, right? So that's an interesting play. I'm going to break down these companies and look at their actual financials and see if there are some opportunities for us in this marketplace, right? The next is Raytheon. RTX is the ticker symbol, owns $115,000 worth. Raytheon holds $1.2 billion in cybersecurity contracts with the Department of Homeland Security. They also spun off Operation Nightwing, which protested a $2.4 billion DHS contract awarded to a competitor that then was voided. So RTX on our list. Next is Carpenter, ticker symbol CRS. He owns $150,000 worth of this stock. Carpenter supplies specialty alloy used in military aircraft, naval vessels, and missile systems. Obviously, this war is happening. Right? Whatever you want to call it, a conflict, a war, however you want to slice it, we need military aircrafts, naval vessels, and missile systems to carry out these operations. I am not for this war at all whatsoever, but it is a reality, right? That's the unfortunate circumstance that we're in right now as investors, but we got to play the game because this is the game in the hand that we're dealt, right? All of which are operated by the Department of Homeland Security agencies, including the Coast Guard and Customs and Border Protection, right? So this is on our list as well. And the fourth one is Amkor Tech. Ticker symbol AMKR. He owns $150K. Again, Amkor received federal funding from the CHIPS Act, where DHS and CISA designated semiconductors and chips as critical infrastructure. Trump's administration also owns a strategic partnership with Amkor Technologies, right, guys? So we're going to break down all of these companies. But first, here are some of his recent stock purchases from the filing on March 2nd. Here we go. Adobe. That's a company that I've been buying. I love where this company is at valuation-wise. And then there's Carpenter, which we talked about earlier, CRS, APG, VSEC, which we talked about earlier, and he's got some healthcare and education funds, MCK, Stride, LRN. If you want to check them out, they're not on my list for today. And financial services, Citigroup, and First Cash Holdings. So some of his major long-term holdings are the Magnificent Seven, including NVIDIA, Microsoft, Amazon, Apple, and Google. He just added to his position too with Chevron and ConocoPhillips. Definitely getting a little more energy heavy for sure. RTX and LHX. Recent divestments. Goldman Sachs, he got out of Dell, COHR, Credo Technology Group, MTZ, Applied Industry Technologies, AIT, and a REIT, Iron Mountain, IRM. Okay, so we're going to break through all of these stocks and see what we like the best. This is Amkor Technologies. Amkor provides outsourced semiconductor packaging and test services in the United States and lots of countries all over the world. So we're going to go over here to statistics, take a look at this overall company and see what they're cooking, man. Cooking with gas. We could see the market cap has exploded in this company over the last couple of years, going from $6.5 billion to $11.3 billion, right? Enterprise value has also increased significantly. The forward PE, higher than it's been in the past. We got 12, 22, 18, 23, 26. So that leaves a little bit of risk to be had, right? The trailing PE in the 30s. This was a lot better of a buy, obviously, a little bit earlier in 2025 and the back end of 2024. But if we take a look at price to sales, anything under 2 is a buy for me. Under 1 is a really good buy. So this was a really good buy. Previously, at this particular valuation, I'm watching it. Selling some cash secured puts could be interesting on this stock as well. If we take a look at the chart here for this company, this is the minute chart. I'm going to see if I can go back and take a look at this company long term. Okay, here we go. Let's go look at over the last 5 years. You know, we've had kind of ebbs and flows where, you know, there are some downside risk. It peaked up at 40, crashed down the back where it normally trades at in that $15 to $20 range. So there's a little bit of risk. It has run up a little bit in the last calendar year or so. Okay. Take a look at the total cash. $1.99 billion in cash, $1.67 billion in debt. Levered free cash flow over the trailing 12 months is negative. Not something I love. Short interest at 3%. That's very manageable for sure. So this is I'm just looking at this as a basis of like, do I want to dive deeper into this company? Right now, just looking at the overall metrics, this is probably like in that C grade range. So probably a pass for me. Okay, here's another company, Carpenter Technology. Carpenter Technology Corporation engages in the manufacture, fabrication, and distribution of specialty metals in the United States and across the globe. Okay, now let's take a look at the statistics. I want to check out this valuation of this company. Another company where the market cap has run up significantly over the last year and a half, over doubling market cap wise. The trailing PE is the highest it's been in a really long time. It seems like, could these stocks keep running? Possibly, but they're trading a little bit rich right now. This company in particular, CRS, price to sales at 7 is really rich. Price to book at 10, I don't love that at all. The PEG ratio and forward PE aren't even listed on here, which is definitely a concern of mine. Profit margin coming in at 14%. Operating margins at 21.13%. Return on assets at 10%. Return on equity, 23.49%. That's a pretty good number there, guys. Gross profit over the last trailing 12 months, that's what TTM stands for, guys, about $850 million. Total cash on hand, $231 million. Total debt approaching $700 million. I don't love that, but the levered free cash flow over the last 12 months is around $250 million. So they are able to service this debt, right? Trading a little bit rich for me. The short percentage of the float is double what Amkor was. Not a stock I'm super excited about investing in, right? All these numbers it's trading rich. Could it trade richer? Sure. But this valuation has went up considerably. The enterprise value has doubled. The market cap, has more than 2x since the end of 2024. Price to sales at 7, numbers I don't love. Price to sales in the 3 range, it's something to talk about, right? So Carpenter Technologies, I hold the phone there, guys. Let's move to RTX Corporations. But just because I don't like these particular numbers does not necessarily mean that the stock can't continue to go up. But we're trying to look at all of these companies in totality and maybe find the best value out of all these companies. RTX Corporation is an aerospace and defense company, provides systems and services for commercial, military, and government customers worldwide. Another thing we got to look at these stocks, right? So if there's a peace agreement and troops are removed, these stocks are probably going to tank, right? So we got to weigh the risk to reward, right? And maybe we get in stocks that he's buying that might not be defense related unless it's a really good value valuation wise. So we're going to take a look at the statistics right now of this company. I do like the trailing PE at 42 and then the forward at 30, right? So we're seeing some, increase in money coming in on the bottom line for this company, right? Market cap, another market cap that has ballooned considerably, almost doubled over the last year and a half. This is a little more manageable of a company. Like, you want to buy this company when the PEG ratio was at under 1, back in 2024. That's where we wanted to buy this company, right? RTX. If we take a look over the last 5 years, 2024, that's when we wanted to buy, right? That was a buy signal here. And then this company has run up considerably. I think a lot of the money has been made, guys, because if we take a look, here, it traded pretty sideways for years. There's been a recent run up in this stock. RTX Corp has demonstrated strong financial performance in Q4 2025 with notable improvements in revenue growth and profitability metrics. So, revenue growth accelerated to about 10%, operating margins about 11%. So, that's something to take into consideration as well. Balance sheet. This is a huge red flag for me, guys. Total cash, $7.5 billion. Total debt, $40 billion, guys. So if there's any peace in the near future and these companies aren't needed as much, how do they service this debt load? The free cash flow over the last year, $6.5 billion. So, they can chip away at this debt, but it's not something I love to see with a company I'm investing in when the cash on hand, the debt load is 5.5 times the cash load. I don't love that. The short percent, no one's shorting this company at all, which is very interesting considering the metrics. Government contracts can keep these companies afloat, but this company, for me, with that total cash per share, this total cash to debt ratio, not great. Not great in my opinion, right? They got $40 billion in debt and only $7.5 billion in cash. So this is a company that I'm an investor in, and I love Adobe. This is a company that he's invested in that's not directly related to what's happening in Iran right now. So if we take a look at this company, if you're not familiar with Adobe, they do tons of different things. They have editing software, photo software, Photoshop, all those kinds of things. I think this company is a great value right now. The market cap has been cut in half almost from where it was at just in November of 2024. The forward PE is under 12. I think this stock is ridiculously undervalued. Remember the other stock we saw, the time to buy RTX is when the PEG ratio was exactly 0.80, like we saw on these financials here, right? Back in 2024, RTX was trading considerably cheaper at $120 per share. So this is a very interesting stock. Price to sales, not a great number, but it's considerably better than where it was. Same thing with price to book, right? But man, a PEG ratio under 1 is a buy signal when I'm looking at investments. And this forward PE under 12 is ridiculously cheap. I love Adobe. I think this is one of the better stocks that he owns, and he just bought this stock, right? He said recent stock purchases right here is Adobe. So I love that. I think he sees the value in it as well. they're in a decent cash position compared to these other companies. $6.6 billion in cash, $6.6 billion in debt, but the levered free cash flow coming in around $9 billion. So they could service this debt load very easily over the next coming years. So I love Adobe. I think they're in a great financial position. And, the PEG ratio is right where I want it to be, under 1. The forward PE is under 12. Anything under 20 is in the buy range, in my opinion, right? And short percentage of the float is at 3%. So we don't have to worry about shorts coming in. Now, let's take a look at VSE. VSE Corporation engages in providing aviation aftermarket parts distribution and maintenance, repair, and overhaul services for air transportation assets for commercial and government markets. So in war, these types of planes and helicopters, they will get damaged, they will get destroyed, so they need to keep building them and providing them with service and maintenance over the coming years. Could be an interesting play here. Let's take a look at the overall valuation of this company. Another company that has just run up considerably over the last couple of years. The valuation almost 4xing. Can it keep running? Sure, but the PE ratio is at 74, trading like 3 times what the market's trading at right now. This seems like an extremely risky investment, in my opinion. So we take a look at VSE over the last 5 years. We've seen a considerable run up in stock price since 2022 when it was trading in the $60 range. A lot of the money has been made already. So a lot of YouTubers are like, buy these stocks. These government officials are buying these stocks. But I don't know, man. I think the risk to reward, there's better opportunities in this market. Do you think this is going to go to $400 a share and double your money? I'm always looking to double my money in the stock market, right? And if it doubles up from here, you're talking about a 140 PE ratio. I'm a hard pass on that, guys. Hard pass on that, especially when the profit margin's at 1%. This seems like a company that if you had the cojones, shorting this company in the long term is probably not a bad idea. Profit margin under 1%. Return on, these numbers aren't great. Return on assets and equity under 5%. I don't love it. Straight up. Total cash. The debt is not where I like to see it either. From $70 million, the debt load's at $343 million, but the levered free cash flow at $170 million makes this debt a lot more serviceable. Okay. So, but valuation-wise, it's trading really rich, like Superman rich. I'm good. The short percentage at 7%, I wouldn't be surprised to see this tick up. I really wouldn't, guys. And then you're in a potential situation where there could be some downward pressure on this stock. Stocks that have run up this much over the last couple of years I don't want to buy here, man. I want to buy maybe here. You want to buy where it's been flat for a little while and you see some opportunity, kind of like a stock like Adobe. If we take a look at their summary, kind of see the downward trend on this stock. That's kind of where it's peaked at $680 per share, over $600 per share twice since 2022. So that's considerable upside. That's more than a double up from where we're trading at right now. So that seems like more of a value than a lot of these other companies, in my opinion, guys. So Chevron, the last one I want to talk about, definitely valuation-wise, everyone's familiar with Chevron. They're an energy company. If you take a look at the market cap, it's went up, but it hasn't ballooned up like some of the other plays that he has. Chevron, the trailing PE at 28, the forward PE at 24. You always like to see the forward PE smaller than the trailing PE. That means they're expecting an increase in earnings, right? PEG ratio at 3.66. You probably want to be buying in the 2.49 range. It's ticked up a little bit, but definitely I'm not super concerned about that. The price to sales, price to book, both under 2, numbers that I like. So Chevron is not out of the realm of possibility for me to add because I don't have a ton of exposure to energy, but we've seen over the last 5 years, It's up 73%. But since 2022, they've been trading pretty much in this range here. There's pretty much resistance in that $140 range around here. And then we're peaking up around $186. We're kind of at the top of this range that they're trading at right now. I don't know how much upside a stock like this is going to have for you. I think Adobe has a lot more upside than a company like Chevron. I don't see Chevron trading at a 56 price to earnings ratio. That would be insanely high for a company, with profit margins under 7%, return on assets at under 4%, return on equity pretty good, decent for this established of a company at 7%. But if we take a look overall, total cash $6.3 billion, another monster debt load that they got to pay on $46.74 billion. That's a huge number there, guys. Huge number. Yikes. Yikes. When the amount of debt you have is 7, 8, 9 times what you have in cash, I don't love that. And the lever free cash flow, not a great number at $13.2 billion. Because you got to take some of that money and reinvest into your company. So you're not there's not going to be a lot of the pie left to attack this monster debt load that you're financing, right? So taking a look at the float, short percentage, it's a nothing burger. So I think Adobe, out of all the stocks that I've looked at, is probably the most interesting to me. A lot of these stocks that he owns right now are trading very rich. Amkor price to sales and price to book seems like the most interesting valuation to me, and their forward PE at 26. If I had to pick one of the stocks that he invested in, Amkor is probably where I want to be. I do love Adobe. That is my favorite by all the stocks that he just bought, in my opinion. I do like Adobe, so I'll go Adobe number 1, Amkor probably number 2, and then Chevron number 3. I want to take a look at Amkor's debt load. See, the cash to debt ratio I like a lot better. So we're going to go Adobe, Amkor, Chevron. That's kind of the order of operations of the stocks that Mr. Mullen, the new Department of Homeland Security head, owns. I love Adobe. I wouldn't be surprised if he keeps buying the stock. It's trading at a very depressed valuation, in my opinion. I think under $300 is a steal long term for this company. And then when it gets up into that $600 range, again, that's when you want to start, selling those shares, because it's hit that $600 range multiple times and then sold off from there, guys. All right, stock market investors, that is my breakdown of all of Senator Mullen's stocks that he currently has bought and the ones he currently owns. Again, we're going to go Adobe number 1, we're going to go Amkor number 2, and then we're going to go Chevron number 3. I think some of the other stocks that he owns, the valuations are very big. The cash to debt ratios I don't like. If you like these kind of videos, make sure you hit that like button, subscribe to the channel, and we'll catch you on the next video.